What's up, traders? So let's do a complete multi-time frame analysis on gold. Let's see what kind of trading opportunity currently we have in this instrument. Now, from the lower time frame perspective, we see that gold is showing significant trading opportunity. Now, before we discuss how we can trade, let's look at the bigger picture to see the general direction in the market, and then we'll jump onto the lower time frame to see how we can trade gold. Looking at first of all monthly time frame to see overall picture. Now, from the higher time frame perspective, we see that after back-to-back strong bullish move on gold from this important level of monthly support, these months after creating an overextended market to the upside, gold has a strong rejection. Now, this rejection, in fact, is needed as we have seen that from the monthly perspective we have seen this impulse. Now we can expect a correction. So if we take our Fibonacci to see the possible levels on gold starting of this move to the end of the move, we see that gold primarily retraced 38.2% Fibonacci level, and from this zone on the lower time frame we have seen a bounce. Now what do we see that gold again the bears coming in the market, this highly likely that this market will come to the 50% Fibonacci level, and also you could see a 61.8% Fibonacci level retracement in this instrument. So there are back-to-back three levels to look at on gold for a potential drop on the monthly perspective. If we look at the weekly time frame to see how the price action is doing, now from the weekly perspective what we see that gold is strongly bearish, and we could potentially see that highly likely gold will finally come back to this monthly Fibonacci level 50% zone here. And also from the weekly perspective, if we closely look at, we see that first of all there was a long bearish engulfer. Now this weekly bearish engulfer can give us an important clue for a potential drop. Now you can see that the price was creating this trend line on the weekly perspective, which is very visible, respecting this resistance line back to back quite a few weeks. The price dropped from that zone, and finally we have seen a strong rejection. That's the sign of change of trend on gold. Now with that change of trend followed by a doji on the weekly, we have seen now back to back 2 weeks significantly bearish. Now currently the price has broken the previous weekly low, which is also an important clue that this market will continue to drop as it has broken the previous weekly low after this long bearish engulf on the weekly. This week highly likely gold will come back to this 50% Fibonacci level, as you can see that in that zone back to back quite a few weeks dojis formed with a weekly candle. This is a very high liquidity zone, and highly likely that gold will be attracted to that zone very soon. So we still have a high probability for gold to continue to drop this week or even next week in this whole month. So with that in mind, let's look at the daily time frame to see how gold price action has done. Now from the daily perspective, we see this price action and the market structure is very clear and strongly bearish. So looking at overall picture on the daily, we see that this market was creating series of higher high and higher low and pushing up with a long-term uptrending market. And finally from this zone we saw that gold created this triple top, or we can find a head and shoulder inside it. With that reversal pattern, gold has broken down from this resistance level with this long impulse on the daily perspective, leaving a neckline on the daily in this level. If we draw a support zone on this neckline on the daily, we see that the price perfectly retested that previous support here of this neckline support here as a resistance on the daily, penetrated that level and then immediately rejected with a long bearish engulfer on the daily followed by a doji. And every time we see that whenever the buyers pushing that price high, the sellers selling this market, creating a long weak candle from the buyer's perspective. From the seller's perspective, we see that there is a long red candle. As a result, we see this market is dropping along this daily channel. Now what you can expect this market to continue to drop, as we have seen, we have zoned out. This is the level where we can see gold highly likely to drop as the price was falling along this channel. Highly likely that this market will break down in this zone, and probably from this level we can expect a reversal or even dropping down to the 61.8% Fibonacci level. So there is a high probability for now gold to continue to drop in all these three time frame aligning together. Now let's look at the 4 hour perspective to see where we can find suitable entry opportunity. Now in this time frame, as we have seen, if we narrow down to this 4 hour, we see that this is the resistance line that is being respected quite a few times on the 4 hour time frame. We see that gold was following this resistance, and also this 20 EMA on the 4 hour perspective that is also acting as a dynamic resistance zone. So what we can expect in this instrument, as you can see, previous session there was a narrow doji. Now the gold is breaking down. What we can expect this candle during the lifetime to give us a lower time frame retracement to the upside along this zone, giving us a suitable entry opportunity. As soon as we will find a spike to the upside on the lower time frame, we will consider going short on gold to take this move to the downside with a high probability trade setup with our students. If you find value in this analysis, then smash the like button and also let us know in the comment section which way you are trading gold. Thank you. I'll see you soon in my next analysis.